Welcome to our deep dive into Wolfspeed's recent stock performance on the NYSE, ticker symbol Wolf. Over the past few months, Wolf has captured the market's attention with an extraordinary rally and extreme volatility. From early July to the end of September, the stock's price action has been nothing short of dramatic, leaving both seasoned investors and newcomers wondering what's driving these wild swings. In this video, we'll break down the key trends, technical indicators, and possible scenarios for Wolf, helping you understand what's really happening beneath the surface. Let's start by looking at the overall trend and what made this period so remarkable. Between July and September, Wolf's stock price experienced extreme volatility. The journey began at just over 1.18 in early July, but the real fireworks happened in late September. In just a few days, the price skyrocketed from around 2.23 to a staggering 28.6. This represents a jaw-dropping increase of over 2,300%. Such a parabolic move is rare and often signals either a short squeeze or a major positive catalyst that shifts market sentiment overnight. These kinds of price surges can be both exciting and risky, so it's crucial to understand what's fueling them before making any investment decisions. Trading volume tells us a lot about investor conviction. On July 7th and September 29th, Wolf saw its highest trading volumes coinciding with major price movements. The average daily volume fluctuated wildly with significant spikes during periods of rapid price change. The lowest price during this period was 0.8, while the highest reached 34.28. Importantly, the recent rally was supported by increasing volume, which suggests that buyers were confident and actively participating in the move. High volume during price surges often indicates strong market interest and can reinforce the trend, at least in the short term. Let's talk about moving averages. The 5-day EMA is currently above the 5-day SMA, which is a classic sign of bullish momentum in the very short term. Most short-term EMAs and SMAs are sitting below the current price, reinforcing the idea that the trend is upward. Even the 200-day EMA is far below the current price, pointing to a strongly bullish long-term trend. However, when prices rise this quickly, moving averages can become less reliable as they often lag behind sharp market moves. Still, the alignment of these averages suggests that the underlying trend has turned decisively positive. Technical indicators are painting a complex picture. The MACD is above its signal line, confirming bullish momentum. The RSI, however, is at an extremely high 93.83, deep in overbought territory. This suggests the stock could be due for a pullback or at least a period of consolidation. Wolf is also trading above its upper Bollinger Band, indicating extreme bullish pressure. The Arun up is at 100, much higher than the Arun down, confirming the strong uptrend. Meanwhile, the CCI is at 440.5, another sign of intense bullish momentum. Together, these indicators show the stock is in an extremely overbought condition. Linear regression analysis gives us another perspective. The slope is positive, indicating an upward trend over the period. However, the R-squared value is quite low, which means the model doesn't explain much of the price variation, no surprise given the wild volatility. The current price is far above what the linear regression predicts, with a deviation of nearly 24 points. This suggests the stock is dramatically outperforming its statistical expectation, which often signals an unsustainable move. When prices deviate this much from the trend line, caution is usually warranted. Looking ahead to the next trading day, the opening price is likely to be close to the current closing price of 28.6. However, with the stock in such an overbought state, there's a real risk of a downward gap at the open as traders rush to take profits. If selling accelerates, the opening could be significantly lower, possibly in the 26 to 27 range. This kind of gap down is common after parabolic moves, as investors look to lock in gains and reduce risk. It's a moment where caution and quick decision-making are especially important. When it comes to support and resistance, Wolf is in uncharted territory. The stock is at an all-time high, so there are no clear resistance levels above the current price. On the support side, key levels include the upper Bollinger Band at 18.51, the TSF at 14.43, and the 5-day SMA at 11.19. With the current price far above these supports, there's plenty of room for a significant pullback. The lack of resistance above means the stock could keep rising if momentum continues, but the overbought conditions make this less likely. Average True Range ATR is a popular measure of volatility. For Wolf, the ATR is at 2.57, but this likely underestimates the true volatility given the recent explosive price action. Based on ATR, the potential high for the next day is around 31.17, and the potential low is about 26.03. However, with such extreme moves in recent days, the actual trading range could be much wider. This means traders should be prepared for significant swings in either direction, and risk management becomes even more critical. Let's consider the bullish scenario. If the current momentum continues, Wolf could keep climbing, especially if more positive news or strong buying pressure emerges. However, this scenario is less likely given the extreme overbought conditions. For the rally to continue, the market would need to see sustained optimism and perhaps new catalysts. While it's possible, investors should be wary of chasing the stock at these elevated levels, as the risk of a sharp reversal remains high. Now let's look at the bearish scenario. Given the extreme overbought readings from multiple technical indicators, a significant pullback is likely. Stock could fall back to the upper Bollinger Band at 18.51 or even lower if selling pressure intensifies. This could be triggered by profit taking or any negative news. Such corrections are common after parabolic moves and they can happen quickly. For those holding long positions, it's important to have a plan in place to protect gain. Neutral scenario is also possible. In this case, Wolf might consolidate at current levels as the market digests the recent gains. This would likely involve high volatility but little net movement, as buyers and sellers battle for control. Consolidation periods can be frustrating for traders looking for quick moves, but they often set the stage for the next big trend. Watching for signs of accumulation or distribution during this phase can provide clues about the stock's next direction. Parabolic move in late September raises the question: was this a short squeeze or did a major positive catalyst hit the market? Short squeezes occur when investors betting against the stock are forced to buy back shares at higher prices, fueling rapid price increases. Alternatively, a significant news event or development could have shifted sentiment dramatically. Understanding the cause behind such moves is crucial for anticipating what might happen next. When a stock is described as overbought, it means that buying has been so aggressive that prices have moved far above typical levels. Technical indicators like the RSI and CCI help identify these conditions. In Wolf's case, both indicators are at extreme highs, signaling that the stock may be due for a correction. Overbought doesn't guarantee a reversal, but it does mean the risk of a pullback is elevated. Traders often use these signals to tighten stop losses or take profit. Parabolic move refers to a rapid and accelerating price increase that forms a steep upward curve on the chart. These moves are often unsustainable and can end with sharp corrections. In Wolf's case, the price action in late September fits this pattern perfectly. Parabolic moves attract attention and can create FOMO, but they also carry high risk. Recognizing when a move has gone parabolic can help investors avoid getting caught at the top. Volatility: this high risk management becomes essential. Traders should consider using tight stop losses to protect profits and limit potential losses. It's also wise to avoid overcommitting to a single position, especially after such a dramatic rally. Diversification and position sizing are key tools for managing risk in volatile markets. Remember, it's better to miss part of a move than to get caught in a sharp reversal. After a huge run-up like this, many traders look to lock in profits. Strategies include selling a portion of your position, trailing stop losses, or setting target prices based on technical levels. The goal is to capture gains while still allowing for further upside if the trend continues. In highly volatile stocks, being disciplined about profit-taking can make a big difference in long-term results. In the parabolic rise, a sharp correction of 40–50% would not be surprising. Such corrections often follow unsustainable rallies as the market seeks a more reasonable valuation. For Wolf, this could mean a drop back toward key support levels. While corrections can be painful, they also create opportunities for those looking to enter at lower prices. Patience and discipline are crucial during these periods. Extreme moves like this are often driven by market psychology. Fear of missing out, panic buying, and short covering can all contribute. Understanding these dynamics can help investors avoid emotional decisions. When everyone is rushing in, it's often a good time to be cautious. Conversely, when fear dominates after a correction, opportunities may arise for patient investors. Wolf's recent performance is a textbook example of extreme volatility and the risks and rewards that come with it. Technical indicators are overwhelmingly bullish, but overbought signals and the parabolic price move suggest caution. Investors should focus on risk management, have a clear exit plan, and avoid chasing the stock after such a dramatic run. Staying disciplined is the best way to navigate these turbulent waters. To wrap up, Wolfspeed stock has delivered an extraordinary rally, but the risks are now just as extraordinary. While the technical picture remains bullish, the overbought conditions and unsustainable price action mean a sharp correction is likely. Investors should remain cautious, use tight stop losses, and be prepared for significant volatility ahead. Whether you're holding, trading, or watching from the sidelines, understanding the dynamics at play will help you make better decisions in this fast-moving market.